It's never been harder to get your home loan approved. In today's video, you'll learn why home loan applications get declined, the exact steps to increase your chances of getting approved, and the 5 reasons you'll get declined after pre-approval. If you don't want to get your home loan declined, then watch this video. And remember to hit that subscribe button because it's free and you can always unsubscribe. Why do banks decline home loan applications? They decline home loan applications for 3 main reasons: credit score, credit criteria, and mortgage insurance. The most common reason for your home loan to be declined is due to credit score, which is determined by both your credit file and the bank's internal scorecard. The bank's internal scorecard is unique to the bank, and unlike a credit file, changes bank to bank. As you can probably appreciate, the most important factor to the score is your credit history with the bank. It's impossible to find out what this score is. Late last year, I helped Nick with a home loan application. After reviewing his home loan options, he decided to proceed with his bank he had been with for the past 17 years. Whilst he had all his banking there, his decision was made easy as they had an amazing fixed rate on offer. Nick was a perfect applicant. His credit file had a score of over 900, which is incredibly high. He had a stable full-time job, no debt, and was looking to put down a 20% deposit. It didn't get much better than this. It wasn't long until we lodged his application. Days later, I received a call from the bank's assessor, and I was excited, expecting to hear good news. The assessor started out by saying, "Josh, I'm afraid we can't support this application." I had to take a seat and I said to the assessor, "We're talking about Nick's application here, right?" The assessor continued and said, "Nick failed to pass the bank's credit scorecard. And from what I can see, he had an unpaid default with the bank about 13 years ago." Remember that banks have very long memories, and even if it doesn't show up on your credit file, your history with the bank will and can be used against you. Just as important is your credit file, which shows your previous repayment history over the past 2 years and includes all accounts both opened and closed. You can access your credit file through such providers as Equifax, Elion, and it's best to check this regularly. Things that affect your credit score include your repayment history, credit inquiries, and the types of facility you have either applied for or have opened. The second reason your bank will decline your application is due to their lending criteria, which covers everything the bank looks at when assessing your loan. Here are 3 examples. Savings pattern. How do you manage money? Banks like to see your savings always increasing. This is known as genuine savings. If you have a savings account, only have money go into the account, never take money out of it. Security. Banks are quite particular when it comes down to the type of property they'll lend against. Unique aspects of a home such as size, location, and type will impact their lending parameters. And gambling. As mentioned before, the bank will look at how you manage your money, and if you like a cheeky punt, it could be a losing bet on your home loan application. The final reason the bank will decline your application is due to mortgage insurance. Early October, I received a call from Shelley, and she was after assistance to get her home loan approved. 6 weeks earlier, she had arranged a pre-approval with her bank. It didn't take long for her to find a home. With a contractor sale in hand, she went back to her bank to finalize the process and get approved. The bank did everything they usually do. First, completing evaluation, which went off without a hitch. From there, she was told that her application had one stop because she only had an 8% deposit. The bank's mortgage insurer had to complete their final assessment in order for the bank to issue the formal approval letter. While she met all the bank's criteria, the bank's mortgage insurer declined the application as didn't meet their lending criteria. Shelley's story does have a happy ending. Having reached out to us, we helped her and were successful in getting her home loan approved. How do you ensure your home loan is approved? One thing that can cause your application to go off course is your spending habit, and it's an area that is super easy to fix and will increase your chance of getting approved immensely. Here are a few things to keep in mind so that the bank doesn't jump to conclusions. Baby gifts. If you have a friend or family with a newborn, you might find that you have a fair amount of transactions to retailers such as Baby Bunting. The bank's immediate thought is that you're hiding something. So before they get any ideas, it's best just to explain the situation. IVF. Probably one of the worst things I've seen the bank do is decline one of our customers point blank without even giving us a chance to explain the situation. Jane was single and was excelling in her career, kicking goals and about to buy her first home. Having no help from family, She had worked hard to save up a massive deposit and was a true inspiration. Upon receipt of her application, the bank simply declined it, having reviewed her transaction, uncovered payments to an IVF clinic. Her application was rejected on the spot for non-disclosure and a servicing shortfall. See, the bank assumed that she had a dependent child, which they weren't aware of. Jane, in fact, wasn't looking to conceive. She had gone to an IVF clinic to freeze her eggs. After informing the bank of this, they overturned the decision. How long does it take to be approved? It varies from lender to lender, but the rule of thumb is that it typically takes 2 weeks. Steps throughout this process include lodgement. This is when the bank receives your application. Pre-assessment. This is when the bank will have a quick look at the information they've received. Providing it meets all their criteria, they'll move it on to the next phase of the process. Valuation. This is where the bank will inspect your home and assess its value. Assessment. This is where the bank will physically pick up your application and complete their first review. At this point, they'll either ask for more information or pass it through to the next step of the process. Mortgage insurance. If applicable, you'll either go through to the bank's mortgage insurer or sign off within the bank's delegated underwriting authority. And finally, you're approved. Why your home loan application will be declined after pre-approval. Switching jobs. Once you have a pre-approval, the last thing you want to do is switch jobs. Most banks will want you to be in your current role between 3 to 6 months. Switching jobs after your pre-approval might mean that your bank will decline your application. Spending your deposit. This is pretty self-explanatory, but if you spend the deposit you had in your pre-approval, it will change the bank's decision in giving you the loan. Additional debt. Pre-approvals are subject to reassessment of your financial situation. If this changes, then so too does the bank's decision. And it's best to hold off on applying for any further credit once you're pre-approved. Change to circumstances. Like the additional debt, any changes to your circumstances can affect your pre-approval. A common one is starting a family, not paying a bill on time. Even if nothing changes, the bank will complete another credit check prior to issuing your formal approval letter. Your repayment history is reported on your credit file, and a late payment can cause your application to be declined. And remember that a pre-approval isn't a promise, and it means that a bank can withdraw their offer at any time. Other things to keep in mind. Look, I get it. The guilty pleasure of transferring money to a mate with a nefarious description. Whether it's bail or drug money, you both have a little giggle, and I mean, who actually reads them anyway? It's not like the bank has to report suspicious transactions, right? Whilst to you and I, it's both obviously a joke, for the bank, it's a different story. In recent years, they've come under increased scrutiny by AUSTRAC, the regulator for preventing and detecting criminal abuse in the financial system. And banks have an obligation to flag all suspicious transactions to the regulator. Failure to do so can result in a fine, which we recently saw one of the banks hit with a $1.5 billion penalty. With the banks leaning in on technology to report these transactions and the penalty for failing to do so high, it's likely your joke transactions are being flagged to the regulator. But more importantly, having an impact on your home loan application, creating a higher chance for the bank's algorithm to make an unfavorable decision on your application. So at best, these choke transactions will be questioned by an assessor, and at worst, it could be causing a decline on your home loan application. The good news is that it's a really easy fix, and might consider sending this video to your mates so that they're on the same page. Either way, it's best to let them know that you'll have to get your kicks another way. And if in the end you like this video, remember to hit that subscribe button. The 5 C's of credit. Essentially, this is what the bank is looking for when they're either approving or declining your application. The first is character. Whilst you might meet all the bank's requirements, you might still be declined if the bank believes your character is unacceptable. There are a few points when determining what your character is. Credit score. Essentially, the lower your credit score, the worse your deemed character. Savings history. The bank wants to know that you're serious about what could be arguably one of the biggest financial commitments you'll ever make in your life. So by having savings history, it'll show that you've put plans in place and that it's not a spur of the moment decision. How much debt you have. Try to avoid as much debt as possible. Things like car loans, credit cards, and even Afterpay. Savings versus income. Okay, so you earn $120,000 but have nothing to show for it. The bank will want to see your ability to have moderation. Late payments. This is a really bad sign for the banks, and they treat each other like family. So keep this in mind when you're paying your bills. payment plans. So if you're self-employed, having a payment plan with the tax office is a little bit of a no-no. The banks look at not only how much you're earning, but also your ability to manage your financial affairs. So try to avoid tax payment plans if possible. Assets versus liabilities. Generally speaking, banks will only consider things such as shares, savings, equity as assets. And it's these assets that have to outweigh things such as your credit cards and personal loans. If they don't outweigh it, then it can have a negative impact on your character if you're borrowing under your limit. Living under your means is a big plus, so know your limit and be under it. How much skin you have in the game. Banks know that the more money you put down, the higher the chances you'll meet your repayments and won't default. The larger your deposit, the better your character. The second C is capacity, and it's essentially, do you have the ability to make repayment to the loan? The bank will essentially look at your income and expenditure, and based on this, determine your ability to borrow. They're looking at how much your maximum borrowing capacity would be. Next is capital, and it's either equity or deposit to meet the bank's lending margins. And many moons ago, the bank would require 20% deposit, but this has all changed and no longer the case. Collateral, known as security, and is the assessment of the property you're looking to purchase. So if the property is unique, as an example, it's an apartment with less than 50 square meters, then the bank may require you to have a larger deposit or may be unable to help altogether. Condition, essentially anything that may affect your ability to make repayments to the loan both now or in the future. Here at Hunter Galloway, we get home loans approved. There's no fee for our service and we help Australia-wide. So reach out and visit us at huntergalloway.com.au or call us on 1300 088 065. We're mortgage brokers who help Australia-wide. Thanks for watching, and until next time, I'll catch you then.